guys, welcome back to Sky Talks Trading. My name is Sky and I am on a quest to invest. And today we're going to be talking about SoFi Stock. And yeah, we're going to be talking about, looking at the price action, looking at some updates, some maybe, some of the political stuff that's been going on. We don't like to get too deep into politics on this channel, but sometimes it is necessary, especially when you're talking about something that is now a bank. And I'm going to be talking about, my own personal feelings about SoFi now, and if I am still bullish about it, because, on this channel, we have been talking heavily about SoFi. Let's hop into the computer and let's talk about SoFi Stock, and I'll see you back here after.
A lot of people are expecting Noto to make some big announcements this week. We're not really sure what they are, but we're hopeful, which is just a good outlook to have in life. But we do know that SoFi will start accepting EBT and Snap cards. Now, this will really broaden the target base even further and add to membership, which is always good. Good for the company, good for us, the investors, good for the customers. Everyone's happy. And let me just say also, I wanted to say, if you're worried, if you're really worried about SoFi stock right now, I would recommend to go and watch the Bank of America's half-hour interview with Noto. It was a couple of weeks ago now. It's very good. It might put your mind at rest about a few things. I've said it before and I will say it again until I'm blue in the face. Investing is about the long term. You can put that on my tombstone. You should be looking 5 years into the future, at least, particularly with a stock like SoFi. Short term, banks are putting pressure on the stock, hoping for a buyout. They know SoFi is a real threat in the future. And I think that's fairly obvious in the interview that I just referenced. So a few other updates. SoFi's management updated its full year guidance to $1.47 million in adjusted net revenue and $100 million in adjusted EBITDA. The update represents a decrease of $100 million in adjusted net revenue and $80 million in adjusted EBITDA from its prior guidance. The new guidance also assumes that the student loan moratorium will not end in 2022, and that's another thing that has people very worried. It seems like something that is just constantly, the goalpost is being pushed all the time, and now it looks like it's not going to end in 2022. But management reassures its investors that SoFi is still a growth story. Even with the decrease in guidance, SoFi is still expecting roughly 45% adjusted net revenue growth, doubled adjusted EBITDA, and tripled margins. But yeah, officially, Biden administration has extended a pause on student loan payments through August. And SoFi executives now expect there will be no payments required this year. And so, that is a big part of why SoFi trimmed their outlook for the full fiscal year. Back when SoFi reported its fourth quarter earnings in early March, the company had said that its outlook assumed that the moratorium on student loan payments would expire at the start of May, and that student loan refinance originations would return to the levels that they were pre-pandemic midway through the second quarter. And now that is not going to happen because of this Biden administration announcement. And they pointed to data from the Federal Reserve suggesting that millions of student loan borrowers would face significant economic hardship, and delinquencies and defaults could threaten Americans' financial stability. The payments to resume in May. Other than that, the company announced that several of its board members plan to step down. For instance, Clay Wilkes, who actually founded Galileo Financial Technologies, that was acquired by SoFi back in 2020, is leaving the board of directors immediately. Also, Michael Combs and Carlos Medeiros, sorry for that pronunciation, both of SoftBank Group Corp, will step down as of the company's next annual shareholders meeting. The truth is that SoFi stock is just, they're dropping from IPO bubble levels. There was a big IPO bubble going on, and now it's kind of bursting, but it is still in a very attractive industry, and it is growing at a compelling pace. Today, SoFi is trading around 70 times this year's EBITDA. Looking beyond 2022 to 2023, we get to an EBITDA multiple of 19. That's still not a low valuation, and investors, should keep in mind that this number does back out share-based compensation. Still, a high teens EBITDA multiple is at least somewhat reasonable for a growth name and is tremendously lower compared to how SoFi was valued at the bubble top. It has been a rough ride because SoFi, has been a pretty bad performer since they went public. And that was the result of a massive decline in the stock's valuation, but underlying business progress was actually very, very solid. So let's talk a little bit about some other stock market news. Let's talk about what's going on with Amazon and the drones. After spending more than $2 billion on a team of 1,000 people, Amazon's drone delivery service launch still remains a little bit elusive. The program is suffering from technical challenges, high turnover, and safety concerns. That's a big one, because not only did a drone accident cause a brush fire in June of last year, people involved in the project said that employee safety was being compromised due to pressure to bring the program back online. Wow, shocker. Amazon spokesperson Av Zamet said in an emailed statement, "No one has ever been injured or harmed as a result of these flights, and each test is done in compliance with all applicable regulations." Let's take a little look at the earnings preview for Tesco, my favorite place to shop. The supermarket chain is expected to report an 80% jump in earnings per share for the year of 2021. The Tesco share price has reeled under the effects of the lockdowns and could begin a recovery after full year earnings show a sharp turnaround. Another one of my favorite places to shop, ASOS. They have set themselves a target to double profit margins when they announced their interim trading update today. If met, the share price erosion it has seen on account of supply chain issues could be reversed. And also, a big news story is that Elon Musk declines to join Twitter's board. So Musk declined the offer on April 9th, the day his appointment was scheduled to become effective. Musk was named a director at Twitter earlier this month, just days after he revealed a large stake in the company. And as the world's richest man, he still continues to remain the largest shareholder in Twitter. So, I don't know, maybe he's just too busy to be on the board.
So there you have it, guys, another SoFi Stock video. Thank you so much for watching. So I just want to say, hang on in there with all your investments and with life. The times are tough. Times have been tough for a while now. And, maybe people don't say this on investing channels, but we're all humans, and, or are we? We are. And, just take some time. Step away from the charts, step away from the computer, step away from YouTube, step away from your phone, your wife, your kids. Just get outside and get some fresh air and some perspective on things. Yeah, that's all. Thank you so much for watching, guys, and until next time, have a great day, and I'll talk to you soon.